Good morning, everybody. Welcome to the Flow Show, Wednesday, the 7th of January. And don't know what to make of today, really. We've got a few moves, but it's fairly quiet otherwise. A few bits and pieces going on, news and whatnot. So we'll have a look at that shortly. Morning, Kay.
Morning, Ryan. Morning, everybody. Yeah, a relatively subdued start to the Wednesday, the first Wednesday of the year. So yeah, maybe need to wait for the first part of the jobs report in the US to get going again.
Yeah, this Friday could be a bit of a spicy one. What with this court ruling or opinion
Oh, as well.
going to be dropping?
Yeah, as well. Yeah, Friday promises to be a serious day.
Yep, absolutely. But a lot of water to go under the bridge until then. Right, just before we kick off, just want to remind you guys and girls of our sale we've got going off, 30% off our trader funding program accounts. Use code New Year 26. I've just put the link in the Zoom chat and the code there for you now. Grab it. That runs until the 18th of January, I believe. And after that, it'll be gone. So take advantage of that forthwitheth. Right, let's get cracking into what's going on. I'm going to start with some data. We had Australian data out, CPI data, people looking at this one to see what the RBA are going to get up to. At the same time, we've got some healthy looking building approvals. Not that we look at that too often, but still those numbers are pretty good there. CPI on the whole, it was up on the month, but the year-on-year measures, the million different ways I want to count it, mostly coming down, the trimmed mean coming down to 3.2, the weighted mean coming down to 3.4, the other weighted mean coming in unchanged at 3.4. So work that one out, why they need two different ones. This has been poo-pooed a little bit because everyone wants the December quarterly numbers, apparently, which will come at the end of January. Data is what it is. It's slightly softer on the CPI front, but that doesn't seem to have changed expectations for a February cut, K. And Aussie initially responded in kind by rallying quite significantly. Does this ease the chances of a hike, do you think?
Well, in my book it would. If you have slightly weaker numbers, maybe the market hid behind those whopping building approvals, but they are like that. That's a very how shall I say, fluctuating number as well. That one. Yeah, it just looks like the market is still on board with the better Aussie. I gladly took advantage of that spike higher during a bit of a sleepless night and sold into the rally at least half of my position. So because I'm kind of wondering why one would buy Aussie on those kind of data. Those are not, if you look at the CPI, those are not data that would move Bullock to hike again. Actually, if you look at the some of the measures, they are now coming or being well below where the interest rates are in Australia. So having a little bit of positive interest rates is always good, but it's not something that shouts for a hike. Now, if you say that people have shrugged it off and want to see the December quarterly numbers, yeah, that's possible as well. Haven't got a clue what the December numbers would have to show or would show over there. Energy has been coming down, but gold been rising. I'm not sure if a lot of those things would impact exactly what's happening in Australia, but on the inflation front, I have no idea what the December numbers will be.
Yeah, it's almost like a book talking trade. Maybe
Mm,
people thinking, "Oh, well, the numbers weren't even worse than that," so that
yeah,
makes it still sticky and still keeps
yeah.
it on track. But
Mm,
I think it's potentially setting up for a decent move into or around the RBA, depending on what this data does. I don't think a hike is as much a done deal as some in the market are expecting. But yeah, if we get a CPI down at 3% at the next reading, there's a lot of air to come out that tire, I think.
Is the next reading before or after the RBA? Because I see RBA is meeting on the 3rd of Feb.
Yeah, I think the next one is 28th of Jan.
Good.
If I recall, I'd have to double check that though. But that's what I think I read sometime this morning or yesterday. But we can check that out anyway.
Yeah, but it's good to have them before the RBA.
Yeah, exactly. Right, moving on. We had some other services data coming out. Japan services number there coming in softer, 51.6 versus 52.5 expected and 53.2 prior. German retail sales for November looking a bit stinky at minus 0.6%. No Black Friday or Cyber Monday boost for those retail sales in November. If December's a bit of a sticky one as well, that will mean that the whole holiday period is not looking too good in Germany. We also get some Eurozone. We had some construction stuff out that no one really looks at. Germany actually went into expansion on that one, 50.3. So maybe some of those infrastructure spending going to work there. Who knows? Unemployment change was up 3K, which was better than the 5K expected. Unemployment rate stayed at 6.3%. We had all the main German inflation numbers out. There were a couple of regions that dropped a bit late, going pretty much the same way as all the other ones there, as you can see from Baden-Württemberg, coming in at 1.9%. Over to the Eurozone, we had the flash numbers there as well. CPI coming in as expected at 2%, a drop of a pip. Core also dropped a pip from last month and expected to 2.3%. So nothing there for the ECB to get excited about. They'll keep rates on hold for the foreseeable. Italy inflation there as well, coming in round about point hot on the years, but nothing to write home about. Still fairly low, a bit like France, well below the 2% mark. JP Morgan says that France, Belgium and Austria face a 50% chance of rating downgrades. Now, France is probably going to be the bigger mover, potential market mover, if their ratings get cut. This is all down to the budget mess still ongoing over there. If they are cut, that might cause a bit of a shift in French assets, bonds and the like, as well as the euro, if money managers, investors have to get out of certain graded debt and things like that, if they keep those sort of parameters for their investments. But this is JP Morgan calling that. But I think it probably is about right, that risk of ratings cut if they can't get their budgets sorted out. Going back to a bit of data from yesterday, Canada's services PMI coming in a bit better, though still in contraction, 46.5. The final S&P global number services saw that number coming in softer, 52.5 in the final from the 52.9 flash and down on last month. We get the ISM today, so we'll keep a close eye on that as well. Fed's Barkin says upcoming rate decisions will need to be finely tuned given the risks to both unemployment and inflation goals. He says the current policy rate is within the range of neutral. Both sides of the Fed's dual mandate bear watching. He says he's paying close attention to layoffs for evidence of a change in current low hiring, low firing jobs market. We get Challenger Gray layoffs tomorrow. Thursday, we get ADP today. So that gives us a little bit of insight into those numbers. Fed's Mirren, he expects the data to support more rate cuts, says the Fed should cut more than 100 basis points this year. His term is due to end at the end of January. Don't know what happens with him getting retaken on, depends on who comes in, comes out, whatever. By then we should have who the new Fed head is going to be. Right, as we've been talking about, first thing, we've potentially got this, or have got this Supreme Court thing coming on Friday, 10 a.m. Eastern time, I believe. Now, there's a bit of discussion over what we're actually getting, whether it's going to be an actual initial ruling or has been reported widely in the press. It's going to be an opinion rather than an actual ruling. So sort of an early opinion on the thing. Either way, it's going to be a yay or nay for tariffs, or it's going to be we need more time to look at things and whatever. So it could be a complete can kick, or there's a potential that it could be some form of ruling. Either way, it's going to be big news. I think, Kay, the market is expecting that it's going to be bad news for Trump. Whether it's going to be market moving is another question, because we know there's other avenues that they could peruse. And even if the ruling is against Trump, it's obviously got to go to the full hearing and then appealed, and it's going to drag on and on and on.
Yeah, first of all, the Supreme Court, and I had on the first reading of that line and the article, I had the same impression. All right, opinions, and then afterwards debate and decision, and it could drag on until end of January. But we have seen SCOTUS take very swift decisions, so I wouldn't rule out that we do have something coming, maybe on Friday evening or so, late in the US day, some form of decision, because the argumentation and what's been circulating around are leaning towards declaring it unlawful, but we've already heard from the Trump administration, Bessent, etc., that they have various other ways of keeping those tariffs in place. So whatever the Supreme Court rules, if it's against what's in place now, it's not going to be the end game. Now the surprise would be that they rule in favor of it, and that would be kind of the end and installed, and then we would have likely a very positive US assets reaction on the back of it, because that means that they will be able to grab all that cash and put it in the coffers and then do whatever they want to do with it. But yeah, I mean, it could be that we have a decision on Friday. I'm not going to say that they won't take a decision.
Yeah, so I think it's going to be it's going to be the severity of the decision, really. If you say there's absolutely no doubt this is illegal or unconstitutional, that might have a bigger market effect than it may be unconstitutional, and we have to look at it further. But yeah, it has. I don't know what the market's going to do with it. What would be the likely outcome? Maybe some dollar selling on the back of it, initial reaction, or could it go the other way where we see the dollar getting bought?
I wouldn't say dollar is getting bought when you have a ruling against the tariffs. I would say that an initial reaction would be dollar selling, because they still have to find new ways to justify them, to make them lawful. Other rules that if they rule against it, we're a little bit in limbo, right? We could have a few waves coming through the market, but I would say the initial reaction should be negative dollars. That's what I would say, like the very simple reaction, because ruling against something that should bring money into the government coffers, into the treasury, is not very good for a currency, is it?
No. But, we know how things don't always move as we expect them to. So we should have an open mind whenever that happens. Anyway, right, let's move on from that. The Venezuela stuff is still ticking along. Apparently, Trump says that Venezuelan oil is to be taken by ships and sold at a market price, and he'll be in charge of all that. Now, he's saying that they're going to turn over 30 to 50 million barrels of oil. Now, if you're looking at the oil markets and what's going on here, this isn't just taking production straight out of supplies. There's a lot of stuff that's been sort of stockpiled. It's sitting on ships because of the sanctions, blockades, and whatever. So a lot of this oil is just stuff that's sitting around, rather than taking new stuff out the ground and sending it over. Although that might be happening later on. But there's been some other shenanigans going on. Because apparently the US have been chasing a sanctioned vessel containing oil, and they decided to paint a Russian markings or Russian flag on the boat, change their name, and try and register as a Russian ship, which has got Russia sending submarines to escort it. So there's all this geopolitical crap going on around this Venezuela stuff, but it does open up the scope that maybe something happens where the US Navy comes in contact with Russian Navy, and there's a bit of a standoff, and the market might not like that. So just keep an eye on that. Over in Ukraine stuff, there's a bit of bullish talk coming out from the European Ukraine side of NATO. The NATO ambassador said the peace deal could be on the cusp because they're near the finalisation of the security pact, and that's had France, Britain and Ukraine signing a declaration of intent relating to future deployment of multinational forces in Ukraine. So it looks like, at least, as I say, from the European Ukraine side, an agreement is coming together over security guarantees and this, that, and the other. However, that's all got to no doubt go across to Putin for his seal of approval, and that's where we may get a bit of a pushback against what is being suggested. So a lot of bullish talk out of Europe, but doesn't mean it's going to be signed, sealed and delivered over by Putin's side of things. That's it as far as I'm concerned for the news. Anything else on your side, Kate?
Yeah, just an article of interest because we've seen Trump talk about Cuba and other areas, but then I read something this morning interesting in the FT saying that Mexico actually became the biggest exporter of oil into Cuba, and now to replace Venezuelan oil. Yeah, they are a big exporter to Cuba, so that is something that we may want to keep an eye on how this story evolves. Just knowing what Trump's foreign policies are, and maybe there's a bit more coming against Mexico. So far, it's a lot to do with Chinese stuff and drugs and whatever. But yeah, I guess they know that that's they know it faster than we do. But there's something that hasn't been spoken about, which could roar its ugly head sooner rather than later, knowing Trump.
Yeah, absolutely. He's already highlighted some of those countries anyway. So yeah, who knows? Who knows? I think, talking about this Greenland stuff as well, which has pretty much got everyone other than the US up in arms and all running around with their
Panicking.
pants on fire. I think he's just trolling everyone. There's no way he's going to invade Greenland. So I think he wants to do a deal. He'll probably get a deal done. He'll set up some bases, pay them a load of dosh or whatever, because that's the main aim of things. But it's funny, I was watching our news last night, and this reporter was speaking to two American bods, and he was trying to get them to say, Trump's going to invade and this is all bad. And they were like, what are you talking about? That's not what he's saying at all, if you actually listen to the people around him as well. But this is all part and parcel of, Trump. He comes out with stuff and what happens
Have the
at
other
the end
ones panic? Have the other ones panic enough to come and sit around the table? But Leavitt was actually the one who said we are not ruling out anything. But I don't think it's anywhere near. But yeah, it has Europe panicking a bit, and rightfully so, right?
Yeah.
You shouldn't let things like that escalate anyway.
No, exactly. Right, quick look at what's coming up today on the data. So we've got ADP. We're expecting 49,000, turning around the 32k negative number we saw last month. I think we're in that type of data jobs market where we're probably going to see pluses, minuses, probably along this double digit line of thinking. Only if we get start seeing a trend in negative numbers, and those negative numbers growing, we hit 100k, we hit 150k, that sort of thing, is the market probably going to take more notice. The jobs market is soft. Yeah, I think we're going to see a bit of this up, down, up, down, up, down. Don't worry, I'm going to have the NFP competition out shortly, and we'll get back on that bandwagon. So yeah, keep an eye on that ADP number. Also got the ISM coming out as well, which again, look at the important components: prices paid, employment. The market likes to take some clues from this. Employment has been negative in contraction in that number as well, but again, it's not falling off a cliff, anything like that. We're also getting jolts later on as well. If there is a big variation there, that had a bit of an upside surprise at last number, which again shows you that it's not all one way in the jobs market altogether. Anything you're going to take from these numbers today, Kate?
Well, if the ADP would confirm the prior month's negative number, like printing 0, so maybe we can have a little bit of a shakeout in dollars again. But I'm having it's hard to see big moves unfold before Friday because all eyes of the biggest money movers will probably be turned already towards Friday, the jobs reports, and then the potential non-decision of the Supreme Court. But we could see a little bit of a shake in the dollar this afternoon. But I agree with you. I think tomorrow's okay. We've got the ISM services, obviously, but then I think that tomorrow challenger job report may be a bit more important than today's ADP if we just stick to the jobs front. And of course, sticking to that jobs, we need to look at what's happening on the employment index in the ISM this afternoon.
Yeah, absolutely. And these December numbers, again, they can be a bit funky because of all the potential holiday hiring and that sort of thing. So, there can be a few skews seen in these numbers. So that's something to take into account anyway. But we'll deal with that later when we're on the face show. Right, let's look at what's going on in markets. Not an awful lot. Probably best to start in the Aussie. I'll leave Kay with Aussie dollar mainly in the short term. Just a look at the wider picture. I've been looking at this morning. We've got some big levels up and around. These are some of the major levels to look at. Got 68. 0.68, 6800, whatever you want to call it. That's the next main level. Other than that, wider picture, this up here in towards the higher 69s, 70, that is going to be a whopper of a level if we get up there. That's around the 50 retracement of this whole move since 2021. So it's going to be a real big level up here. As I said, I'll let Kay look at the shorter term picture. Aussie Kiwi, again, from a longer term perspective, this is really looking like a proper breakout of this near on the 11-year range that the market's been sitting in. And when you get these sorts of big breaks, they can go. We could be getting up to the 120s, 123s, somewhere like that, if it decides that's what it wants to do. What you need to see, though, is these breaks building. So all this area here, down to 114, 114 and a half, 115. You want to see if we get any dips that come back to any of these areas and start holding pretty solidly, then that's a bit of a signal that we are going to be heading higher, maybe, really making a big move here. At the moment, short term, we had the break of this prior high. It's trying to hold. It hasn't really. We've held down into this, also a prior high, just down around that 116 area. So that's your short-term level to keep an eye on. While we're holding that, then the upside beckons. This, again, is just another old high that goes way back. So it needs to build around here, see support building around here to then give us a trigger up further. But certainly this trend has been very, very strong. Doesn't look like we're playing with the magnet at that 108 anymore, as we did all the way through the range back and forth, always coming back to this line. It looks like we're moving away. So yeah, sometimes when you look at a short-term picture, you can trade, but keep your eye on the wider picture as well, because when you get these sorts of moves, they can be big. So it doesn't matter if you've missed anything here. There still may be opportunities for a decent move if you trade it up here the right way. Euro sterling stuck in the mud. Let's go on to that one. We got down into the zone. We hit the bottom of the zone. Now we're in the middle of the zone. So really, if you're looking to trade this one, I'm still happy to be on the short side for the pound. But you know, I'll have to see how deep my pockets are if we keep going lower, whether I need to adjust my positions or not, or add in. But really, you can take your cues from which side of the zone we break out. If we break into the bottom, we're going to be targeting the low 86s, 86 to figure 85 90s. Let's just put that on a 4 hour, might be a bit clearer. So we're going to be heading towards this sort of area down here, which is a decent support point. If we go back at the top, then we're going to be looking to get back towards 86 90, 87, and we may get to see what that 87.20 level is made of, or any return there. But for now, Kay, we've seemed to be over this move, and definitely looks like what do we do now?
Well, yeah, I'm as I was showing yesterday already, and already a couple of times. 86 and a quarter is the massive level for me. I'm not excluding we go down there because the market is kind of like a bit on a pause concerning whatever goes on political wise in the UK, and then you look at growth numbers which are pretty much in line between the eurozone and the UK, which is flatlining. Yeah, I haven't given up either on the idea, the broad idea that sooner or later we are going to run into trouble in the UK again. So, yeah, I'm leaning towards being slightly long, but I'm really I'm reserving the best of my investment power to wait for 86 figure a quarter or a break back above 87, which I think if that would occur, then we could be back off to the races. So really, as you say, stuck in the mud here. Be patient. Don't go and build like I would say. Don't go and build big positions around here unless you know something that somebody else that we don't know. But yeah, here it's a question of being patient, I guess.
Yeah, and if you know something we don't know, please tell us, because
Yeah,
we'd like to know.
yeah, exactly.
Right. Just having a quick look at all, depending on what you want to be looking at. I mean, there's nothing in these charts, Kay, that anything other than bearish, whether you're looking at the short term, the long term, whatever. But we're still not breaking down. I think that's the main thing to look at here. You know, you can make a bullish case against all these support lines, but this price action just lower, 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 lower. You know, the picture says at some point we're going to be doing that if we break down here. Is that can that be the case, or can it keep holding this support?
Yeah. No, I think it can be the case. I mean, look at the picture tells more than 1,000 words. It's just not bouncing for more than a few sessions once more. I would perhaps think though, if we get a shakeout, that may be one where we have to be very careful, like kind of like drop below, have a $5-10, even drop back down to that yeah 20 what is it 2019 level down there, and then which is like in the low 40s, and then all of a sudden party is over and we go massively the other way around. But it, I mean, looking at it, it's a hard job to be long unless you're lucky that those lows there, those multiple lows that we printed during the course of 2025 are the rock bottom. But again, we don't know if anyone's sitting down there on the bid for size. Yeah, it doesn't look like a bullish picture to me.
Yeah, exactly. Right, I'm going to pass it over to you, sir.
Yeah, mate. Yeah, and just slightly different view, and I've been showing that yesterday as well. And on that Aussie dollar, because I think this 67, 20, 25, 30, we've been trying a number of times, and now we're through it. It's positive, okay? But I I I bought it yesterday thinking that we may go for a walk, and I was not for the CPI really in Australia. I was not, but a bit later, and I saw it back up in the 60s. Then I looked at the number and I said, well, there's nothing really bullish, or more bullish than it was before for the Aussie. So I let a fair bit go there. Luckily, I woke up when it was trading around 60. Um, yeah, but again, purely based on those inflation data. I'm a little bit reluctant also to really carry the long in versus the dollar. I think still think that Aussie Kiwi has the better look of everything, or perhaps the Euro Aussie, as I also showed yesterday. Unfortunately, we did not get a retracement to sell into, not a big one enough anyway. But this one looks to have broken now, really broken, and could be on our way to 171 or something, or even back to those lows. Yeah. We have a prior low there in May 2025, which is around 172 and a half. That could be something that is monitored by markets as well. But this looks like a break, and this just continues to show the relative strength of the Aussie globally. You look at the Euro Aussie, you look at yeah, people are looking at Aussie CAD as well, for instance, and that's doing pretty well as well. But Aussie overall, even the Aussie dollar is breaking, but Aussie overall is like behaving very well, and that's kind of the opposite of what we've seen in yen for quite a while. Although now has to be said that the dollar yen is stabilizing, even with the dollar crawling back against euro, against the sterling yesterday, against the Canadian dollar, and against Swiss as well, for instance. Dollar yen has stabilized. So this is maybe something else going on there. And I'm actually half surprised we are not a bit higher because of those threats and curbs of exports of Chinese dual use items to Japan. That we are not trading the yen a little bit weaker. So there must be something different going on there in the yen. I don't know why. Just maybe a lack of interest to start the year. That's possible. Um, but yeah, this one has stabilized. But then it shows the difference that we had. Okay, yen was weakening over the last months of the year, and the strength that we're seeing currently in the Aussie. And this is something that I personally look at a lot, or even most of the times, to form myself an idea which currency is the better one to own versus which currencies are maybe the weaker ones to own. And one of those could be. I'm not saying it will because it's very stable and the option vols are extremely low in the euro dollar. So it's going to take something to break either 116 and a half or 117 or 117 and a half around here. Um, but this one also looks like rallies starting to find sellers. Okay, so uh, and that also translates in that euro Aussie, for instance, that we see. So again, a comparison between different currencies and different moments of strength or weakness. If I would want to buy dollars, I'd rather maybe buy dollars against the euro than buying dollars against the Aussie, for instance, right? So this is something that I'm looking at very very often. Um, and then we have to look at the metals because yesterday I was talking about this trend line here about that 44.90. That's exactly where we stopped. You know that I've been right after on the open of the week. I bought it after the Venezuelan thing, and we really rallied. This was as I've been talking about in the room yesterday, this was my target zone, and I took it. I took the 44.90 yesterday, and we have corrected a little bit down to that 42, 44, 42, 44. Sorry, and this is now our range that we can play inside if you want, until we get a break either side. Now, having capped over here may mean that 4,500 is enough and that we need to build a pause in markets, okay? But it doesn't mean that we have to break down here it's immediately. But I would not even be surprised if we go for a little bit of a look lower because the market bought at the start of the week. I know it's been, and I've been saying it so often that it's not related to what's happening in the dollar, but get job reports that defy the laws of gravity and that come out better than expected, it still may have a little bit of an impact, and we can go for a walk lower. For the shorter term, because the overall picture still is still mega bullish, of course, but for the shorter term, this is maybe becoming a kind of a pivot zone in the short term, but I think 43.80 here. 43.80 is going to be a biggie. If we get back down below, that would mean that we could correct lower another $100 or so, all right? Before we start to look really at the medium term. I'm just looking at the possibility of things. Of course, if you break above 4,500, then the all-time highs will be looking us right into the face. Silver, nothing changes. Still very, very bullish, albeit still very volatile. So watch out. You're doing $2-3 in the space of a couple of hours. That's a lot. But I'd say for as long as we're above this little zone here, 77, 77 and a half-ish, even short term, it's still bullish. More medium term, we could have something similar as in gold if the metals correct a little bit, maybe having a look at 74.75, 75 and a half, but the big zone is still here, right? The big zone just around 70, about a buck and a half wide. That is going to be the big one. And I'm just want to reply lastly on that Euro Swiss, Ali. Well, first of all, I don't like the short side of Euro Swiss just because it's Swiss and you get zero interest rates, and when you're long Swissy, you're paying up. But it seems like this little range here that we're in now, you could maybe trade it 93.15, 93 something 17. But if we go back above 93.20, I wouldn't be short Euro Swiss anymore. So this is not the side I'm looking at, but I understand what you could try to do if this range remains valid. But I'm not a fan of being long Swissy as a currency. As a matter of fact, we start of the year we had a few dips below here, and now it's showing a little bit of a few signs of wanting maybe to start creeping back higher. And with that, Ryan, back over to you, mate.
Yeah, thanks a lot, mate. Good stuff as always. And we'll end the show there. Thank you, everybody, for coming to the Flow Show as always. Catch us later on Face. Otherwise, we shall see you tomorrow. Have a great trading day, everyone.